Welcome back, everybody, to our Tips for Mortgage video series. My name is Mike Parkinson. I'm a mortgage broker with Dominion Lending Centers in Campbell River, British Columbia. And I'm with my cousin Jaden Bax, all the way from Mexico.
Yes,
He's with Avenue Financial, just outside of Calgary, Alberta. How's the
yeah,
weather there, Jay?
it's beautiful. I'm nice and tan last couple of days here, and life is good. But it's cold at home, but I'm looking forward to getting back.
Yeah, I bet. Hey, you've been there 2 weeks, so I
Yeah,
can't imagine having sunshine for 2 weeks. Like, I tell you, it
yeah,
must be
it's a
tough.
tough life. I tell you, it's a tough life.
I'm pasty white and you get a nice tan there. Anyways,
That's
we're moving on here. Today we're going to talk, this is our rate update series for February the 1st. We're going to just discuss a little bit about rate updates. We're going to try to bring you this information every week or two. Things are changing quite rapidly. Today, the U.S. Fed is announcing what they're going to do with their overnight rate. Everybody's predicting a quarter point hike there. So who knows? We'll find that out in the next half hour, an hour or so. What's happening with them? As everybody knows, last week or the week before, the 25th, Bank of Canada increased a quarter point, which was on our last video series. We think, Jay, we pretty much discussed this. We think that they're done, or they're very close to being done. What do you think?
Yeah, and we've thought that before, but I think there's really, if you look at the progression of the way that they've risen rates and the rhetoric around it, and what Macklin has been kind of laying down for people, his setting of expectations. Absolutely, I think I strongly feel that this is the last one. Strongly feel that it should be the last one as well. I think our economy needs a little bit of time to process all of this. We know a lot of you. Part of the problem is that there's a small portion of the population that's in an adjustable rate mortgage or
Right.
a variable with a break tipping point there, right? So
Yeah.
people maybe aren't feeling it in as broad of a way as across the economy, and so they're not getting a lot of feedback from the people about how much this is actually hurting the bottom line, right? But
Right.
it's been incredibly aggressive, something that we haven't seen in decades. This kind of rise, right? So, but luckily, like I say, like the rhetoric, it seems to be changing. They realize that they're pushing us towards a recession, and are hoping that it's small, and so hopefully we're going to see a little bit more of a stable 2023. And I think you and I are both of the opinion that the pundits, the people connected to the Bank of Canada are saying
Right.
around the end of 2023, we think there's going to be a little bit more aggressive change on rates.
Yeah, and honestly, let's get back to what you just mentioned there, the lag effect. It takes 12 months really for these. I think we're starting to feel the first few increases now, but man, we've had some ginormous rate hikes, like you said, some of the biggest in history. When rates move up that much in 10 months or within a year, things are going to have to change at some point, right? Now, if you look back at the history of charts of interest rates, when they do go up, they come back down, right? We just don't know. We don't have a crystal ball. We don't know how far or how much, but bottom line is that corporations are going to start to feel it. Companies are going to start to feel it. You're going to start to see a little bit more layoffs. So unemployment's going to start moving up. So there's a lot of things here that could change quite quickly. However, right now we haven't seen a crisis. So until we see some sort of crisis where the Bank of Canada and the Feds have to say, oh my God, we got to do something here. I think they're going to try to keep rates as high as they can for as long as possible. So it gives them a bit of ammo. So how long will that be? Predictions and the markets are still thinking, they're going to start to move rates down in the second half of the year, but we'll see what happens. So the biggest
And
thing.
in the
Go
meantime,
ahead.
I think there's a lot of we talk about this all the time.
Yeah.
I talk to a lot of people who are talking to their banker, who there's plenty of good people in the mortgage industry at the banks, but I don't find that they're tend to be as educated as us in the entire mortgage industry, because they don't have to do the same kind of ongoing education and things like that as we do. They're focused on their own products, and I'm hearing a lot of clients come back and talking about this. Well, best price in the market right now, far and away, is the 5-year fix.
Right.
And they're really getting that pushed at them, right? And
Yeah.
saying, like this, you can get a 4.74, 4.69 in some
Right.
places right now on a 5-year fix. and people are loving that. But imagine, Mike, imagine
I
12
imagine.
months ago what you would do
Yes.
if somebody offered you a 4.74 or 5-year fix.
You'd be like, what? That's private money. Like, come
Yeah,
on.
yeah,
Like seriously, like and that's something to think about is that it's so funny how our minds get used to certain things. It's like gas prices, right? It's like, oh, it's only $1.70 a liter, right? Instead of 2.30 out here in BC or whatever it is. It's like, man, that's high. Like, come
yeah.
on. Like, you just get used to it. And then when things drop a different level, you're like, oh my God, that's great. It's all the narrative that they want you to believe, right? So I just want you to be careful. So a strategy Jay and I always talk about is a lot of people that do want fixed rate mortgages. We do talk about the 1 year, the 2 year, and the 3 year, pretty much at the maximum the 3 year, because we do feel rates will be down within the next year or two at the most. I think, again, just my opinion. So that's something to look at. Even though the 1 and the 2 year are higher, the 3 year is actually not too bad, but the 1 and the 2 year are quite a bit higher. It just means that if rates do drop in the next year or so, you're actually renewing at a much lower rate. So that could save you a lot of money over the long term. And the variable as well, even though it's not attractive at all today, a year from now or 2 years from now, that could be back down to 2 to 3% or something, right? So you could be laughing there. So it's just strategies to talk about, and
Yeah.
you have to be comfortable with what you're getting into. So that's the main thing.
Yeah, absolutely. And so, and then that's, we just want to have all those conversations. The easiest thing in this industry to sell is a 5-year fixed because
Right.
it's everybody's grandparents' mortgage, mom and dad's mortgage was always a 5-year fix, right? So that's what we're asking today is if you're watching this video, you like the information we've given, you're thinking about getting a mortgage, or maybe you've got a renewal coming up, you're worried about what rates are doing at renewal time, how you'll be able to afford that. Give us a call. We're happy to chat with you. Call Mike, if you're in BC, call me in Alberta, and anybody across the nation you can call. We're really happy to have a chat, and we're happy to say to you, because quite often at renewal, the best offer you're going to get is the offer from your current lender, right?
Right.
That's the cheapest acquisition of a client they'll ever get, is just renewing a current one,
Yeah.
right? So we're also happy to say to you, like, listen, that beats the market. This is a good strategy to take what they've offered you and make sure you're paying the least amount possible over the entire history of your mortgage.
And is that, again, on renewal, we've talked about this on renewals. So if your lender's making you an offer on renewal and even if it's the lowest rate, is it the right product for what your plans are moving forward? So that's, you just have, no matter what, you have to have a conversation with your broker, call us anytime, ask these questions. It's really important. So hopefully you got some value out of this. We will be updating you every week or two with the rates. And if you know anybody that's interested, please share these videos with your family and friends. We'd love to hear from you. So have a great day, everybody. And we'll see you next time, Jay.
Yeah, thanks.